Best way to describe Cerrado Gold, or to summarize the value play here, is to describe what I think differentiates Cerrado from other junior miner stories out there. The first and foremost, I think, is to say that we are in production. So we've been in production at our Argentinian asset, Minera Don Nicolas, for over 5 years now. We did 50,000 ounces of production last year at sub $2,000 all-in sustaining cost. We'll do another 50 to 55 to 60,000 ounces this year, again at sub 2,000 all-in sustaining cost. As you can imagine, that provides a very healthy margin at current gold prices, a margin that would generate in excess of $150 million US at the moment, which is in excess of our current market cap of Canadian 250. The other differentiating factor, I would say, is that we're not a single asset story. We have our production asset, which is generating a base of cash flow and base of value, but we also have two well-advanced development projects in Portugal and in Quebec, Canada. The second project off the rank is Lagoa Salgada. It's an advanced VMS deposit in Portugal on the northwest part of the Iberian Pyrite Belt, so a very prospective geological area. Lots of history of production, in fact, production pre-Bronze Age, and the resources there continue to grow. The third one is Mont Sorcier. Mont Sorcier is a iron ore project, high grade, high purity, magnetite project in Quebec, just outside of Chibougamau. The key differentiating factor of that project, in my personal view, is the lack of required infrastructure that needs to be built. We're 25 kilometres from a Canadian national railway, which runs all the way down to the port of Saguenay, where there's an existing port ready and willing to take this material to market. The third and final thing I would say that differentiates Cerrado from other projects is our corporate strategy. So as a junior miner, I think dilution is something that's very important to or should be very important to every company, and it's certainly important to us. And our strategy has always been to develop these assets in a financially sustainable way, and how we do that is to bootstrap the cash flow from MDN and our cash balance to develop the next project and the next project, subsequently growing our cash flow to greater and greater numbers. And what that means from a high level is that in a period of 5 years from now, when Mont Sorcier should be in production, we could be a company generating in excess of $500 million worth of free cash flow without having to raise additional equity at all. All going well. So this is a little bit of our history here. You can see that we've been in operation in Argentina for some time. Very steady production rates coming out of Argentina. We've spent the last couple years developing that infrastructure for production. We've put a heap leach project into production. We've now developed the underground under our existing pit in Paloma, which is now producing nice high-grade material that's going to the mill. The focus for that asset in 2026 will be exploration. So we did just short of 15,000 meters worth of drilling last year. We'll do an additional 50,000 meters of drilling on that asset this year. That's all well funded within cash flow, and the aim there is to continue to grow that mine life there and keep that production at 50 or subsequently increase it. So whatever we find there, whether it's low-grade resources or high-grade underground resources, we have a production facility available for that, whether it's the heap leach project at Calandrias or the mill that's sitting there in the middle of Minera Don Nicolas. That brings us to our second project. So the second project, Lagoa Salgada, as I said, it's a polymetallic project, but it has a very substantial amount of precious metals associated with it, primarily silver and gold. That project has a feasibility study on it that was completed in 2023. We're in the process of updating that feasibility. We've done a lot of things to optimize that project in terms of reducing the infrastructure, increasing the recovery rates through advanced metallurgical testing, and some other things around drilling and growing the resource based on the current metal prices. So that feasibility or updated feasibility study should be complete within the quarter. And then we need to go through the permitting process and look to get a final construction decision, all things going well, in the near term. this slide, I think, really highlights our strategy. And on the top there, you'll see I've put all the production numbers into gold equivalent, just to make it simple. We are a multi-asset, multi-commodity company. But in gold terms, in a very short period of time, we could be quite a substantial producer on gold equivalent basis. And again, what that means is that we can roll production, cash flow, and cash balances from our current operating asset into developing Lagoa Salgada. Lagoa Salgada was predicted to produce around $100 million worth of free cash flow using prices back in 2023. I think that number's probably close to double now, but we'll have to wait and see what the feasibility comes out with. And using, whether it's cash from MDN or Lagoa Salgada, we can then roll that into the Mont Sorcier project. So here is some slides highlighting what I think is the upside here at our current operating asset, Minera Don Nicolas. You'll see we're currently mining from underground here in the existing pit. We'll continue to drill underneath that resource and grow the underground resources. It had very little drilling to date. As I mentioned earlier, we'd focused most of our capital spend on putting the production infrastructure in place, and now 2026 is really going back to the drill bit and drilling substantially to grow the company and grow the resource base. As I said, there's several avenues for production at MDN, whether it's high-grade resources that will go to the mill, whether on surface or from the underground. And then additionally, we have our Calandrias heap leach project, So any lower-grade resources that we find can then go through that mill. And so what we've been feeding to the mill to date has been around the 5 to 6 grams per ton material. Any additional gram adds about 1,000 ounces of production, and that's pure cash flow that goes straight to the bottom line. So any exploration upside we have on the underground or even open pit high-grade resources has real torque in terms of our production and cash flow generation ability. Lagoa Salgada, I will just briefly touch on. It is a well-advanced project, as I mentioned. We've submitted our application for our environmental approval. We're in the process of understanding how that will resolve itself. However, the project is highly prospective. So we, as a company, build a project to a scale that we can develop ourselves with our existing cash flow. But I think that's just the beginning of the story for Lagoa Salgada. We have 30 million tons right now in terms of resource. It took us only 40,000 meters worth of drilling to get there, so very good return on the drill bit. We will continue to drill that project, and these VMS projects generally have a history of growing in terms of finding additional lenses. So if you look at some of the peers on the belt, whether it's Neves Corvo, which is owned by Boliden now, or Matsa from Sandfire, there are a series of stacked lenses, high-grade copper, zinc, lead, base metals, lots of precious metals as byproduct credits, and we've got a single lens right now with some associated stockwork. So this thing will continue to grow along strike, along depth as we drill it out. And then third and finally, I think the real sort of hidden giant here in our company is Mont Sorcier. So Mont Sorcier is a project just outside of Chibougamau. It's a very large, high-grade iron ore deposit, and we put a PEA out on that project some time ago that demonstrated a $1.5 billion NPV and around $1 billion worth of capex. No infrastructure build required in terms of rail or port, so that really brings the kind of return of NPV to capex. I think probably outside of any other iron ore or bulk metal project in the world today, and that is going to be a real game changer in terms of scale and cash flow for the company. Thank you very much.